There's so many things going on right now that I'm personally watching in fear. We have a high inflation rate, couple that with rising interest rates, and obviously the war that's going on overseas. This is where I really need your help and support to let me know down in the comments where you think we're at as an economy and where you see us heading in the next 1 to 2 years. So we'll be going over my personal thoughts as to where we sit, and hopefully we can get some direction together and make the right investment decisions for the future. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, if you learn something new or I add some value, hit that like button for me. I definitely appreciate that. And if you could, hit that subscribe button and turn that notification bell on for similar content just like this. We're going to be starting out with inflation. It's definitely been a hot topic. I believe the year-over-year number was 5.1% of inflation, which are numbers that we haven't really seen since the 90s. That is 30-year highs. And a way to combat that is to raise the interest rate. And these interest rates have been at these all-time lows really since 2008 when they started dropping these numbers back in the financial crisis. And we've tried and tried and tried to raise these numbers, but it seems like the economy is so in love with these low numbers, and we've almost become in love with debt. And debt is a huge problem, which we'll be covering a little bit later. But we got this important news out of the Bank of Canada that we're going to start trying to raise the interest rate. So the last time we did this was in 2018, and it did not go over well for the stock market. It did crash towards the end of December 2018. And I'm predicting that if we continue to raise, there may be an instance where we run through this same particular sell-off. We might start seeing stocks continue to sell off. So obviously, going back to it, Bank of Canada goes and raises the interest rate. And the title of the article that we see here is Getting Inflation Back to Target. So the policy rate, we decided yesterday to raise the policy rate by 25 basis points to 0.5%. The bank will also be considering its quantitative tightening. So they won't be printing off as much money, which is obviously going back to how we got to inflation in the first place, is that we've been throwing so much money at this problem and we're creating so much money in the marketplace. And obviously coupling that with the supply side restrictions, we see supply chains are in an absolute mess. We know that you can't cut off the supply and you can't stop the world and then all of a sudden flip the switch to get it back up and running and not have these problems create. So that is, in a nutshell, kind of where the main problem has kind of started from. And where we're at today is we have a huge balance sheet. So we have so much debt that we owe, and our interest rates are so low that if they start to increase them, then it will be harder to pay back this debt. Where are we going to get this money to pay back the debt, especially if our economy could slow? Now, on the good side, our GDP numbers for Q4 in 2021 were relatively good. I think it was over 6% growth in GDP, which is awesome. That kind of gave the Bank of Canada a signal that the economy is ready to start raising the rates. Now, we take that into perspective of where we're at on a Canadian economy basis, and obviously the hot topic is housing. We have seen a rise in the rates and not only the rates, but obviously home prices haven't really crashed since the 90s. So it's kind of one of these things that the prices will never go down, and people consider this to be a relatively safe asset. Now, this is definitely, something that I can't argue. I brought up many times before about some of the problems that this will encounter in terms of the higher home prices. The first one being that if all of our money and all of our income is going towards paying down the mortgage, then where will the other money come to spend to, whether it's services or retails, goods, things for your home? We'll be so indebted to our house that might slow the economy heading forward. And one of the articles that I found this week was that Canadian mortgage debt reached 96% of GDP. And, you know, this is definitely a huge concern, especially when we look at these numbers. So Canadian mortgage debt reaches 1.94 trillion. 1.94 trillion. That's 96% of Canada's GDP in total. We're almost a housing economy if you look at it. We're not putting any money into oil. We're not putting any money into technology. It just seems like everybody's money is going towards real estate. For an idea, the annual growth in mortgage debt is equivalent to double the GDP of Luxembourg. It's a lot of debt. If we look at this, we see Canada's residential mortgage debt is continually raising. And where the problem comes is that with these rising interest rates, the mortgage rates will in turn rise. Now, the percentage of your income that you're paying towards your mortgage will continue to rise. And if we look at an example here, just to give you an indication of what that looks like, we've covered it in a previous video, which I'll link above. But if we look at the average mortgage of $371,000, a homeowner with a variable rate of 1.5 with 25-year amortization is now paying about $1,485 a month. And if Canada raises the interest rate by 175 basis points, which is definitely the goal by this time next year, then that would raise the mortgage rate to 3.25 and monthly payments would rise $322 a month. This is definitely a concern because at what point does it end? At what point does it stop? If you're already looking at the average person paying over 50% of their income towards mortgages, it's a problem. There's so many other costs, like there's so many other things that are rising. And I think that leads us into our next point. And the next point is obviously with the catastrophe that's happening overseas. It's led oil to shoot up to $110 per barrel. And I'm sure you felt it at the pumps. In Ontario, it's expected to be $1.84 per liter, which is the highest it's ever been. And we covered this in last week's video. Oil was only at $90 a barrel. So in a quick week, it's gone from 90 to 110. Not only is oil a concern, because obviously as we start to open up the economy, we'll be getting back in our cars. We will feel that pain there. Also, Russia is a big producer of fertilizer. And what is fertilizer used for? It's used for food. Last week, we also covered Nutrient. It's a Canadian company that does potash. That price was $103 when we looked at it. The last I saw was trading at $113 a share. So we've seen it go up $10 a share in just a quick week. So we're feeling it. We're feeling the rising costs of living. Where our standard of living isn't increasing at the rate of inflation. We have interest rates that are actually impacting our mortgages as well. There's so many different things going on right now that are causing me to panic a little bit. And I know I'm a big preacher of, holding for the long term and, buying on dips. But right now I'm completely flabbergasted as to what's happened. And that's kind of where I need everybody's advice and everybody's input. So let me know down below what you're thinking. The only thing that's bringing me back to bullish is that Warren Buffett, a big fan of his narrative, and he says, be greedy when others are fearful. And that is kind of where we're at right now, is that there's so much fear and there's so much panic, especially if we look at the fear and greed index. You would almost be silly to not have a watch list, to start nibbling into companies that you've always wanted to buy into, but you've always seen them being a little bit high. So that's where I'm going to try and, keep this motivation and keep this positivity, because I'm not investing over the short run. I'm investing over the long run. So let me know what you think. Am I completely wrong, or am I on the right path? And I hope you enjoyed the video. I hope you got some value out of it. If you're still here with me, hit that like button. I hope you all have a great week in the markets. Keep the faith. Take care.